going on, traders? Welcome back to another video. It's Jorge Trades, and as you can tell by the title, this video is how to think like a professional day trader. Trading psychology. You've probably clicked on this video for many reasons, and I've written down some of the key points that we'll be going over in this video. So, we start off with what is trading psychology. I give you like kind of a little rundown on what it is. Why do I sell too soon? Why do I bag hold a stock? And why do I overtrade? These are some of the key points that we'll be going over. We're going to be going over some of the emotions also, and near the end I'll be giving some tips on how to overcome these emotions, or at least keep them neutralized. So let's begin. What is trading psychology to begin with? Trading psychology refers to the emotions and mental state that help to dictate success or failure in trading. Trading psychology represents various aspects of individuals' character and behaviors that influence their trading actions. Trading psychology can be as important as other attributes such as knowledge, experience, skill in trading. This is why when you watch some YouTube videos on psychology, professionals traders say trading psychology is 60 to 90% of the trading that you do on an everyday, and most amateurs traders, they just look at technicals, go based off what they see because they think that's the most attractive to them. But really, trading psychology is it's so much more important, and this rest of the slide will show you how just how important it is. So looking at our second question, why do you sell too soon? Fear could very well be the reason why you sell too soon. Fear is the strongest emotion we have as traders and is most difficult to overcome. Fear taps into a mind of scarcity and causes us to be shaken out of good trades and be immobilized. So if you've ever gotten in a trade and had your stop in your target and you still got out pretty much early, that is because of fear, most times than not. So why does when does fear show itself in your trading? Fear tends to pop up when you oversize and don't feel comfortable about the risk you put on. This is the most common way we can see this emotion in our trading. So if you've ever double sized in shares or try to size up, you immediately feel a sense of regret. You feel an overwhelm in your body, like in your mental state. You start feeling stress, you start getting like anxiety or something. This is from you not being comfortable with the amount of shares you're trading and how much money you're putting out to risk. So that kind of gives you a little red flag. Looking at the next question, why do we bag hold a stock? Bag holding a stock refers to a trader that holds onto a stock for too long and ends up giving back their profits. Bag holding is just another reference for greed. Greed is our second emotion, pretty much opposite of fear. Not necessarily, but it kind of is. Greed. Greed can be described as an intense desire for something and often manifests as the intense desire for more than what is offered. Greed can cause a trader to take a fantastic trade, hit his target, and keep looking for more and still end with a loser. Why do you overtrade? Is the next question. Fear of missing out, or FOMO, could be the reason why you overtrade. FOMO taps into a mindset of scarcity and consistently looks at everything as the best opportunity ever. This emotion can tap into desires in getting rich quick and or possibly missing out on the next Bitcoin. FOMO causes you to overtrade because you're scared of missing out on the greatest opportunity ever. Now, we're going to be going over some fear and greed examples, looking at charts, because I know everyone likes charts, so hopefully this is pleasing to you guys. This is what you want to fear. This is all jokes, but this is fear. Um, and this is ticker Apple. Now, if you guys want to look up this trade, this was Apple Friday, so this past Friday. So yeah, let's break this down. I had a support level right here, a support level right here. It came down, created a new support level, bounced, pushed up, pushed up, pushed up, got rejected by our support, and started coming back down. Found a support at a whole number. Um, Tried pushing back up, it couldn't. So now I was looking for a short trade on this. I end up taking a position at this whole number right here, and it immediately started coming down. It closed under its support, so now I was anticipating a move quickly to break down from the support, the previous support, the morning support, whatever you want to call it, and I had my stop up here. So next candle open, immediately started pushing up to the upside, and I stopped out. I just sold all my position. I didn't even get stopped out actually. Um, I had my stop where I wanted it. I have my target where I wanted it. But just seeing myself going from green opening to red was fearful trading. Why was it fearful trading? Well, because with I went in with 200 shares when I was trading $50 throughout the whole day. So I was taking about 4 trades. I took about 4 trades. This was one of them. So this is the one where I wanted a double size, so I wanted to risk $100. So once I had a fear in the back of my mind of losing on this trade, and I didn't fully accept the risk of losing $100. I wanted to finish the day green. Everyone does. So once I saw myself go into red, I panicked. I just shut down and I just closed off the trade. Looking back at it, it's like the dumbest thing ever. But this is fear in it's like and it's pretty much reality of trading. I took this trade Friday. I took a position, I had my stop loss, and look how much it went down in 2 candles. So in the next slide, we're going to show you we're going to be giving some tips on how to avoid something like this, how I can avoid something like this. But this is an example of fear. Just getting out before your stop loss, before your plan, not trading your plan is what is causing you to lose money. Just like how I lost money Friday. Greed. So now this is a harder example, but taking a look at greed, there was an entry here. As you can see, a huge resistance level. It got rejected 3 times, got rejected a 4th time, curled, and then had an entry point. So this entry was right here. I don't think it was a whole number, but it was right here. Stop was right here. So you're just holding, 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 holding. So now you put yourself in such an amazing position in this trade. You're like, all right, let's turn this into a swing trade. I'm not going to take my partials. This thing is moving up so nicely. And let's just wait for the market to recover. I think the market can recover all the way back to its highs. So let's just hold it. So it comes back. You start feeling fear. You start feeling fear. Okay, it's bouncing. It's bouncing. We're feeling good. We're feeling good. Shoot, it made a lower high. Comes back down. You're fearing. You're fearing. You're fearing. You're holding. You're holding. Oh man, I'm a genius. This broke down. This previous resistance is now acting as a support level. I'm freaking genius. Boom, 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 boom. And it starts tanking. Oh, no, 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 no. Getting greed, fear, greed. Oh, I'm the best trader ever, And you're just still going to hold on to this trade. You said it was going to be a swing trade. And then now it just starts curling. Now it starts curling. Now it starts curling. Now it starts curling. All right, yeah, this is gonna bounce. This has to bounce. It's already bounced off so many times. Let's just keep holding. No. All right, it bounced off of my entry point. We're still gonna hold this. Starts going up, crashes down, goes back up. All right. I'm save them, save them, save. And then it cracks down even more. This is an example of greed. An example of greed is like not taking partials, not having a set target, and just really not even having a plan when trading. So, yep, those are two examples of fear and greed. Just quick examples, but these are now three tips that will help you trade without emotions. Um, Trade high probability setups. So this is I feel like not necessarily to go from least important to important, but this is the bottom one, right? Okay, so trade high probability setups. Find a niche and build on it. Trading your niche is when you find something in the market that you feel comfortable trading and you devote yourself to getting better at this little sector you made. It could be example for large cap, penny stocks, tech sectors, ETFs. Now, I usually trade tech sector. I trade large caps. I trade stocks like Apple, Nvidia, AMD, and I just stick to this little basket of stock. I have my little basket of eggs, and I just stick to it. I just take care of them. I don't try going looking for any other opportunities necessarily, unless it's like huge volume or gap up. But I just like to stick to my little sector because this is what I know is reliable, and these are companies that will be relevant in the next 10 years. And so I'm just trying to devote myself and get better at this sector that I made. On the second tip, set up stop target before trade. So set up a bracket order. A bracket order is set up when you want to get into a trade with a stop and target order placed when you purchase a stock. So now when you get into a trade, let's say you want to get at $25, stop 24.50, target 26. So you got to set up a bracket order. In this bracket order, once you place your entry and um, buy the stocks. So once you're into the market and you have shares in the market, you're gonna have your stop loss set up. You're gonna have your target set up, and this will help you tremendously. Why? Because you already know what you're risking and what your target is, and you really can just let the stock move however it wants, and it's gonna have to touch one or the other. Either it's going to stop you out or it's going to hit your target. That's why it's up to you to trade high probability setups. Now, another tip is size down. This should take some fear away from trading. So, size down. If you're trading with 100 shares, try 50 shares for a week. Trading half of your original size will take some stress off of your trading and will allow you to handle a loss efficiently, with efficiency. Why? Because if you're already trading with 100 shares and you size down to 50 shares, you're gonna handle it so much more because you're already used to losing $100. So this won't really get into your mainframe or your mentality or really budge you. So you're just gonna be able to trade more efficiently. You're gonna be able to take better trades. You won't be as stressed, and you'll just really just become a better trader if you just size down. And then you'll start building up after. Once you've proven yourself you are a better trader, you just slowly build up. Question time from the traders in our Discord. First question: should I wait for confirmation or take the trade now? Trade has to be quick, but how much should I wait? So how much you should wait, or should I wait for confirmation? You should always wait for a confirmation. And looking at my Apple trade, we can give an example here. My confirmation was it had a support level. The support level now acted as a resistance level. I had trouble getting up and over. Now I was anticipating a move under the previous support level and a crackdown. I just got fear based, but you can see that this trade gave you confirmation once it closed under, and then also when it tried to get bought back up, and then immediately started coming down to the red, and then cracked this level, and then even cracked its previous support level. So I would 100% always wait for confirmation, cause if you try to get in like here, or here, there's no confirmations. You're not getting any closing candles above resistance, and you're just exposing yourself to false breakouts. So yeah, 100% always wait for confirmation. And how much you should wait? You should just wait for support to become a resistance level like this. Um, you can start loading shares once it breaks and then starts holding above, and slowly add. And as you can see, what was resistance is now acting as a support. What was support was acting as a resistance. Just don't wait. Don't trade it like on third, fourth candle, right, all the way up here. But just try to start sizing in once you get this support and resistance like clearly showing you. All right, second question. If I've been losing consistently, how should I revise my strategy and approach? Should I develop a new one? Should I keep doing what I'm doing? Should I trade lower shares? How should I approach this differently? So, to answer the first question, should you develop a new strategy and revise your strategy? I 100% think you should. I think you should just stick to about two strategies. It could be from VWAP balances or support and resistance, channel breakouts, just whatever you think works for you. If you're a long trader, develop trades to the long side. If you're a short trader, just try to focus on a niche to learn how to just trade, short the very best you can. Um, Should I keep doing what I'm doing? Of course not. If you're consistently losing, you have to be doing something wrong, and you need to journal your trades. You need to write down what you're doing wrong. Find out what you're doing wrong if you don't already know, and just go from there. Build on that. Find out what you're doing wrong. Build on what you're doing right, and just grow from what you're doing right. Should I trade lower shares? 100%. Go half shares. How should I approach the trade differently? Um, Learn how to win. So learn how to take small winners, not necessarily looking for big targets, but learn how to win and learn how to trade efficiently. Um, Try not to get into as many false breakouts. Try not to get in as many false breakdowns, and just wait for confirmation. 100% just wait for confirmation, and always trade your plan. So why do pro traders only take 1 to 4 trades a day? Well, pro traders take 1 to 4 trades a day because they're focusing on quality over quantity. So, a normal trader would probably take a breakout like this, would get faked out, wait like this, faked out, and then they finally get a confirmation right here, and this is like what? About an hour or two. So they take quantity, quality over quantity. They put the probabilities on their side, And if they know they don't have more than a 50% chance of winning on the trade, they don't even think about taking it. There's only a couple ideas per day that are very high probability, and this is how you see them go on green streaks of 20 plus days in a row. Um, just like over here, you got a resistance level, resistance as a support. You buy here, have your stop here, and you got a very high probability setup. You know, if you're trying to get in here and then look for this, you know, you're just going to get a rejection. But when you get closing candles above the resistance and resistance is now acting as a support, you get a very high probability setup. So this is like a 30% probability setup to win, um to like a 60. This is like a 60% because this has already been rejected so many times. What's the likely that it'll come and curve down once it's already been grinding up for a while and cracked its resistance? So just put the odds in your favor. The professional traders put odds in their favors, and they always trade high probability setups. Uh, how do I not let a green day turn into red? So this goes beyond psychology. This is more into discipline, but why you get from green to red, it's because you're being greedy. You're not happy with what you have, and you just want to make more, obviously. But you got to realize that there's only a couple trades per day, a couple dozen trades per day. You're gonna miss some every single day, but just taking most of them is really all that matters. So um so just like when you stop seeing high probability setups, you gotta stop trading. And if you don't feel mentally stable to trade, don't even take a trade. um you'll save yourself so much. So trade high probability setups and just take your money and run whenever it's the market tells you to do so, you know. Don't look for trades, let the trades come to you. It's really all I gotta say for that. So yep, this concludes this mini crash course of trading psychology. You can follow my socials below. I'll leave the Discord if you guys want to join our free community. I'll leave it down below in the link in the description. I really hope you guys enjoyed this video because this video is full and packed with knowledge. So if you guys did enjoy, make sure to leave a like, comment that you enjoyed it, and that you want to see something very similar to this. I could do other like trade managements or strategy webinars. So yep, this concludes this video. And once again, thanks for watching, and I hope you have a great day.